Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Good morning, good afternoon, and welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader, and today we have a great show as usual. Develop Your Edge. We like to hear what Anthony has to say about trading, and with that, we're not even going to waste time. Let's bring Anthony on. How you doing, Anthony?
I'm doing great, Tom. Going to be a really good show today. I'm going to show why I'm short the S&P right now. I'm going to have the dome up. We're going to talk about which index to choose to trade, and I'm going to go over a very simple process, something that I've done pretty consistently in this show by showing VWAP, by showing opening range, and we're also going to talk about order flow cumulative delta. I get a lot of questions about order flow cumulative delta, and it's a great tool on NinjaTrader, and we'll talk about also how that played a role in shorting the E-mini S&P today, micro E-mini S&P.
Awesome. I can't wait. Before we jump into it, I do want to remind the viewers that if you have questions for Anthony, you can join the chat at ninjatrader.com/events and just put in your handle. We don't ask for an email address. Put in your handle. Any questions for Anthony during the show related to this topic, we'd be happy to hear your comments, questions, and have Anthony address them. So ninjatrader.com/events will get you to the chat. But I'm excited for this because it's a little different from what we've been doing the last couple of weeks. This is really, how as a trader do you determine, with so many markets at your disposal to trade in, how do you determine the right one for the environment today?
Yeah, exactly. Right. And so let's go right to the charts. Let's get right into it. And when you look up at the charts today, you're going to see that I have NinjaTrader up here on the 3-minute chart. And then to the right, I have Trade of 8. I've said this before. Most of you know NinjaTrader, Trade of 8, same company. And I have up here in the Trade of 8 dome, I have the 4 micros. That's what this is about. Focusing on which index to trade. I mean, obviously you could do this the same thing for the bigger product. I focus more on the micros here because we know we've got a lot of retail traders, newer traders to futures markets. And I think that, micros are a really good product for them. You could see that this is my live dome. I'm short 1 from 46.5 in the E-mini S&P. If you don't even know what the 50 cents is and why I say half, it goes even, quarter, half, 75, even. And that's really the language. I think that's important to understand that, because I remember when I first started on the trading floor, everyone's like, add a half, add even. And I'm like, what's a half? What's even? That's what it is. Half, quarter, 75, even. So there's that. And then when you have the 3-minute chart up, what I look for, and I really only trade the S&P, NASDAQ, and I'll trade a little bit of Russell. I don't trade the Dow much, but obviously you can use this for all 4 of them. And when the market's really busy, I just want to say that most of the time I'm just really focusing on the S&P, just because I don't want to spread myself thin and be jumping around with indexes too much. But when you're looking for a trend type day, like today, was really a day I was looking for, a trend type day. I put a free note out on Twitter. I put it in my Discord. It's all free. You can read it. And I told a lot of the traders in the Discord, not a lot, all of them in the Discord this morning, I said, today is most likely to be a trend down day. And there was no reason I saw to be long at all. And I didn't really have a super strong setup. And obviously I did these micros. I knew I was coming on here, and I just did a very small position with it. Nothing major in the bigger markets. And I'm going to kind of go over that as well. So the first thing that I look at is, let's look at all of the major indices on the same time frame. Now, even if you're trading the micros, I would personally suggest using the bigger product for your charting. I just think it's when I'm looking at order flow tools, I want to see where the bigger players are. The smaller MES, MYM, M2K, MNQ, that volume is not as important to me as the bigger product, right? And so when you're looking at cumulative delta, like we are going to talk about that, and you're looking at order flow volume profile or order flow VWAP, use the bigger product, right? Because that's where the bigger money is, and that's what you want to follow. So first thing I look at, and I've talked about this extensively on here, 3-minute chart. I highlight the opening range in each product, draw a horizontal line at the top and the bottom of it. Then I have the regular trading hours only. So it's the CME group RTH. You can see that on NinjaTrader. I'll just actually, I put a horizontal line there. That's not what I wanted to do, but double click on this. And then you will see over here, and then you'll see CME US indexes RTH. Okay. Let me just go over there and delete this one because it doesn't need to be there. And so the reason why I do this is because I want to see where the majority of the volume is, and I'm trading regular trading hours. So I just get hyper-focused on that session. I don't look at what the overnight's doing because it doesn't really matter that much to me. I look to see what we're doing during the day because that's my time frame. Some would argue with that, but that's just the way I go about it. You could do whatever you think is best for you. But for me, when I look at these 3-minute opening ranges, I look and I say, okay, what is the VWAP doing relative to the opening range? Our standard deviations opening up, are they going downward, flat, upward? What are they doing? And when you see what you're seeing here today, where this VWAP gets below the opening 3-minute range here on the Dow, and the standard deviation lines are grinding lower, why would you want to step in and buy that market? And then look at the order flow cumulative delta is just trending lower with the market. So what does that mean? That every time the market's bouncing, you're seeing sellers come in and they're growing positions to the short side, right? So you have a downtrend, you have downward pointing VWAP, downward pointing standard deviation lines, and a downward pointing cumulative delta. Pretty Captain Obvious that really you don't want to really look for a long, you want to look for areas to sell. So it's just recognition, like what's happening in the Dow, right? Even though the market made a higher high outside of opening range, the VWAP stayed within it and slowly moved lower with the market. So we look at that. Then we go and we look at the NASDAQ and we say, what's the NASDAQ doing? Okay. NASDAQ actually more weakness on the open, where you did not have a higher high, and you see the opening 3-minute range and the NASDAQ just steadily move lower, and that VWAP got low really quick. And the cumulative delta in the NASDAQ is negative, not quite like we're seeing in the Dow, but it is still negative. And when you look at price versus cumulative delta, you just look at it and say the majority of the volume with the VWAP representing that is below the opening range, and you have a downward trending market, right? But you have these standard deviation lines that are pretty flat, right? And so when you look at the NASDAQ, your first thought is, okay, it's a little bit weaker on the open, but flat standard deviation lines, which means I could expect a lot of volatility and probably a two-way tape. Why? Because the standard deviation lines are flat. It's not expanding outward. It's not moving down with price, right? And so the standard deviation moves are relatively tight. So you get a 2 or 3 standard deviation move away from VWAP, and it's not that big of a move in the NASDAQ, and it snaps right back. And you're like, man, what is going on? And so it's probably not preferential to trade to the short side versus the Dow, because the Dow has more cumulative delta to the downside. It has downward pointing standard deviations, and that VWAP continues to grind lower. So you say one versus the other, you say Dow's a little weaker. It's the one I'd probably prefer to short more because it's got more price potential to the downside. Now let's look at the Russell. Russell looks like a total chop fest, right? You have opening 3-minute high and low. VWAP is still in between the opening range high and low. Standard deviation lines are flat, and look at what's happening down here in the cumulative delta. It's flat, right? And so it looks very similar to the NASDAQ. Why would you want to step in and trade the Russell short? As you can see, it's just squeezing people out. You know, it's just a pinball machine in here, right? And so when you look at that, it's just very clear when you look at just these simple tools that this is not the preferred market to be short today. So even though it is setting up like it's a little bit bearish, just because opening range is still the high and you got a little bit of negative delta, it confirms the overall of what the indexes are doing, which is downside today. But it's not the one you probably want to trade, because look at the way it's trading. It's very choppy. If anything, this is the one you're scalping a two-sided market, right? And that's, once again, pretty clear in some basic tools. Now we go to the E-mini S&P. Now look at the E-mini S&P here. Opening range is the high of the day. VWAP got below the opening 3-minute low relatively quickly. Standard deviation lines continue to grind lower. And look at the order flow cumulative delta continues to grow to the sell side. So every time we were seeing bounces, I was talking about this in our Discord, just there's sellers are there. I mean, wasn't the easiest tape really to get short because you kind of had a choppy Russell and you kind of had a choppy NASDAQ. But when you looked at the S&P and the Dow, they're the downside leaders today. Those are the two indexes you're going to want to choose to trade. And now, how do you go about trading them, right? And so we laid out the 4 indexes to look at it and go, okay, if I want to be short today, because I think that the market's setting up that way and everything proved that, which one's the best one to short? And the answer is the Dow and the S&P because of everything I explained. Now, how do we go about doing it? Here's why, if you look to the dome here on the right, I'm still short 1 up at 46.5. And the reason is, originally I sold 3 and I was hoping to be able to get on air and show how I rotated out of them. And the way that I did it was as following. And this is another reason why, even like the micros, even for, traders like myself, I typically don't trade the micro E-mini S&P pretty much ever. I only trade the big S&P. And so, but on a day like today, it's not a bad idea if you want to scale into some stuff with some micros. When you look at it here is you have this opening range high and you know that the other markets are looking very similar, right? And then the market starts to come back down. Once we cross below that opening range low, I was like, okay, today is pretty much setting up like it's a trend day. Volume was okay. We had some 10 o'clock numbers. Market didn't really do too much on them. We've got a ton of Fed speak. So it's like, how much weight or emphasis do you want to put in stepping in before that? I think we've got Powell today at noon. You look at that and you go, okay, what I'm going to do is I'm going to start by stepping in and looking to sell right around this VWAP. And originally that's what I had done. And then we go back up in here. I see I actually had another one up at 50 quarter, and I'll explain why I had that one in there, which I never got filled. And when you look at it, you looked at the standard deviation lines, and I said to myself, I'm actually going to delete that for now. I looked at the standard deviation lines and said, we might get pulled higher because of what we're seeing in the chop in the NASDAQ and what the chop we're seeing in the Russell. So when you look at it on a scale of all the indexes, you're like, man, this Russell can make a new high. The NASDAQ can come right back up. So what I look for when I'm trying to short a market like the S&P that I think is going to be a trend down day, I start trying to pick them up at the standard deviation lines. First one's in VWAP. Okay, right? Second one's at second standard deviation, which came in at that time like around 48. And at the time up in here, you could see it's right around 50 quarter. And that's why I had that short sale up there. Because I'm like, you know what? I'll sell into these 2 standard deviation lines and put a stop just above the high if it's going to be a potential trend down day. And that's what you look for. And you let the market get you in with these NASDAQ and Russell choppier looks, because it pushes the market around back into trend, even though the market's set up to a trend down day. Because if you see the NASDAQ rip up or the Russell rip up, of course, you're going to have ES traders are going to be like, oh, buy them. They're going to want to buy into it. And then the sellers continue to come in, and you see that within the delta. And so it confirms that, look at, even though those other markets are choppy and maybe you're regularly a NASDAQ trader or a Russell trader, and you're going, well, why do I want to step in and trade this? Maybe I should go to the S&P. Maybe I should go to the Dow, because when they're getting to resistance, they're coming off. The Russell and the NASDAQ, when you look at them, they're chopping around and they're not giving you the better looks. And so I know I put a lot out there, Tom, and I'm going to probably talk about how I would scale out of it at this point now, because I think it's a trend down day. But I think I laid out the groundwork for what is, when should you choose one index over another?
Oh, yeah. I think, it makes complete sense when you're looking for a trend in a day where there are some index futures, there might not be a trend, right? Choppiness is certainly harder to trade than trendiness, right? And so when you see, like you said, a 2-sided tape on NASDAQ and Russell, I'd rather be where the trend is. And, one thing I think that's important to restate is with the VWAP, when the VWAP closes outside of your opening range boundary, your box that you created, when it starts to trend either way, even a pullback up to, or let's say a rally into the first standard deviation, second standard deviation above, if it gets there, it's not going to move the VWAP back into the opening range because at this point in time, the volume isn't there. The volume at the opening range is so much more than it is an hour later that you've kind of set that trend, and you can identify it early enough on that you can make the distinction between this is a trending day, this is a choppy day, and like you said in the Russell and the NASDAQ.
Exactly. And, this cumulative delta, it's a tool I'm really getting a lot of questions about lately. And why do I like it? And I should emphasize why this is also playing a pretty big role in this is when you look at what's happening in the market, anytime the market is in a trend day, you want to see for really confirmation that the volume is going with the trend. If it's going against the trend, I could talk about that in a second as well, why that's significant. But when it's going with the trend and you're seeing a market trend with delta, it just tells you that the sellers are coming in very orderly. They're just not in a big hurry. And then so what happens is you see how the tape can be like, it can get really choppy and then it just rips up. But then you go to the delta and you go, did they really buy it? Because sometimes you're going to see the S&P move 5 handles. And immediately the first thing I look at is I look at the delta. Did they buy 1,000 back? What happened there? And the reality is if nothing really happened, it calms me down to look at it and go, still net sellers on the day, nobody really came in to buy anything. And so then you look to see where we are relative to the VWAPs. And you're like, look at, we did get back into the opening range a little bit. We did get above the VWAP, but there's no real buyers there. I mean, they barely took them to where they were. All they're doing is buying it back a little bit. And so anytime you see that delta comes into the buy side slightly on a rally back as a mean reversion, and then immediately sellers come back, that's a true tell of a trend type day because they're confirming that they want to sell resistance. Think about this also as a really big player in the market space. If you have to sell a lot, or if you know that you want to be a seller, you don't come in and do it all at once. You slowly do it and you wait for opportunities. Remember, people with a lot more money than us can be a lot more patient than us. And so anytime a market moves back into a mean reversion, into a trend day, you watch that order flow cumulative delta. Is the bigger players coming in and they starting to sell? And that's why it allows you to hop on these trends. And so hopefully that makes sense, Tom, as to why I believe that's such an important tool to keep an eye on.
Oh, for sure. And to kind of say it another way, if I were to be one of those big buyers or sellers, let's say I was a big buyer and I just put the entire order at the level that I need to buy, that would move the market against me, right? I'd be buying higher than I want to do. You spread it out, you're camouflaging your intentions, so to speak. And that's a big part of the game for these hedge funds, these institutions that have much bigger needs in the market, much bigger volume.
Exactly. And I want to touch on something else. I know we're talking about choosing your indexes today, but I want to talk about cumulative delta when it goes the opposite of trend, because you actually have the perfect example of yesterday. It's funny, even in our Discord yesterday, I talked about this with an hour to go in the day. I don't know. Some people were looking, maybe can we get a rally? Can we get a ripper back? And I said, you know what? The delta continues to grow to the upside on a downward selling pressure day in terms of price, not in terms of delta. I said, that actually makes me more bearish. And my reason for this is because if you were to, anytime you see a day like yesterday where the market's going down and the delta's going up, the longs most likely have not capitulated. You've got a lot of day trader longs in the market. And so anytime delta's going against price and it's trending in that direction, towards the close, you can see these little bit of these squeezy type moves. And that's why I said we could probably blip down. And I was saying yesterday to like 30 to 25 area. I said it wouldn't surprise me at all because the weekend longs just kind of blipped out. And you could see they kind of blipped out. And then there were some stronger players that came back in and bought it back up. And ultimately the delta closed near the highs of the day or on the highs of the day. And so that's just something important to know why this tool is so important. You will understand as time goes by more nuance in these situations to where it actually helps you just become a better executor of of the marketplace. And that's why I really think that it's one of my favorite tools on NinjaTrader is the order flow cumulative delta. And it just sits there and it's just telling you facts, man. It's not telling you anything else. It is plus 4,000 or negative 4,000 today. And that's it. And you look and see how it's trading on the price action. And you go back to where we are right now. Look, you could see market makes a low, gets to 3 standard deviation. Buyers stepped in on that one big bar. Look at its sense. They're trying to get some buying in, but the price is not really confirming it. And so on a downward selling day, eventually does that start to put sellers back into 2 and 3 standard deviations, which is what I'm going to talk about next and how I look to start scaling out of like this final one lot that I have left. I always talk about the rule of 3 in this show because when I'm executing, I always like to have at least 3 on because it allows me 3 entries. It allows me 3 exits. Anytime you're held to a single price, it's very difficult. Like I'm never, almost ever all in at one price, and I'm almost never all out at one price. There are times that does happen, but it's situational. It's way less often. So when you look at a day like today, if it's really going to be a strong trend down day, you look at that 1 standard deviation move in between there, and I watch that delta. So I put a little bit of a trailed stop. So like right now, the recent high, let's just call it 35, right? I'll look at it and say, I'll give it to 36.75 on my stop. I'll give it a little bit of wiggle room in case this thing just rips up there. But I'll watch this area and this delta and what it's doing at this 1 standard deviation. Now, this could become an area where I look to sell again. So if you look at this right now, you're going to say right now it's right around 33.75-ish or 32.75-ish is where it is. So what I'm going to do is I'm going to work another one and I'm going to continue to rotate a one lot around the one lot that I already have. And so this is part of the thinking of where, okay, look, I got filled. Right. And so now I'm looking in and I look and see, okay, look at this is where, okay, when we're coming back up, Delta's starting to build back up to the upside. I'm going to keep a really tight leash here. I want to see, can it start taking out these prior highs? Because if it starts to get above here, you could see a ripper up to 39.5, which I'd look to sell again. So now my average position is 39.5. I'm not going to give all of that back. I am going to watch this area and we'll watch this delta. See, we start getting above that area and I say, okay, and I'm watching it. I always keep a little bit of a blow off stop up there just in case this thing starts to rip up and gets me out. But I watch how it trades around the standard deviation line. And I say, okay, 32.75, there it is. Comes right back down again. So what is it telling me? Every time the buyers are coming in and you're even getting to his measly 1 standard deviation line, sellers come right back in. The buyers are not gaining ground on the rallies. So now I look and go, okay, I've got a pretty good idea of where I want my stop to be. Maybe I put it just above this recent high. And so I could even probably move this down and move my stop to like 30, 35-ish, so I'm short, still well above there. Sorry about that. So I'll scroll down and I'll look and I'll say, okay, I'm just rotating around my current position of 39.5, which it actually comes in right at the VWAP. So I go, okay, now I'm going to rotate out of this one lot. So 25.5, that's about where that next standard deviation line is. I'll make sure I get filled. I'm going to continue to work the bid just in front of it. So I'll work a bid at 26.5 and I'll try and trade in between these 2 standard deviation lines and continue to put risk on, take risk off, put risk on, take risk off. Watch the action. Gets to the area. Buyers come in. I see it gets absorbed. Boom. It should almost be somewhat of a magnet to that lower standard deviation. And so I just keep rotating it and keeping that one lot on. And that's how I learned to really manage a short throughout the day.
That's really smart. Trading between the VWAP bands, you see these moves and you think, oh, wow, it went to the second and then it went back up to the first and maybe it went to the third and back to the first. But I think it's really, it's not as easy. You have to be actively trading. You have to be actively watching to trade between 1 and 2 or VWAP and 1 or wherever the tighter restrictions are.
Yeah. And look at how it went down there. It filled me. So I'm back to 1 again. And I just continue to rotate. And I'm going to rotate around this one lot. And, who knows? I mean, it could be in this all the way to the end of the day, right? And eventually there might be a washout to a 3 standard deviation of a really big move, and then I just cover it, right? Or eventually I get trailed out of a stop, which would still be a winner. And I'll still continue to look and see what are they going to do at 1 standard deviation. They could spend hours in between here. I don't know. It could happen. Look at order flow delta. This is also, once again, why this is so important and why I like this. Look at this right here. I move this away. Let me do that. So when you see this right here, look at how when the market went up to there, it made a little bit of a higher high, not higher high in delta, and bang, sellers came in. This is why I use it as confirmation. My eyes were all on that delta at that time. I'm looking at it, I'm going, man, if the buyers start coming in, I'm just going to hit exit and market cancel and just blow out of it. Because at that point, maybe there are some strong buyers that take us back to VWAP. Why would I wait? Wait to see what it does at VWAP. If it gets up there, I'll look to potentially get short again. I'll wait for my next opportunity. And so that's how I trade in and out and rotate out of positions. And I think for micro traders, goes back to what I had talked about, that theme. Most micro traders are way over trading because they're not that expensive, right? And so anytime you are in a less expensive product, you're trying to do more out of the market. What you really need to be doing is expanding the width of your execution and have a stronger hand in positions versus trying to click a bunch. Because the more you click doesn't mean the more you're going to make. And so you just got to wait for these rotations, right? And so that's the way I approach it. I mean, this is the way I trade the biggie mini S&P, of course, as well.
So Anthony, I have a question about order flow VWAP, and let's say the current situation, you've got one lot on, right? And your 3 lot is kind of where you are in terms of where you could go, right? You could go up to 3 lots, let's just say.
Yeah, for this example, let's say it's 3. I like the 3 is a minimum I would trade.
Right. So you get up to VWAP, 1 standard deviation below VWAP, right? Which is about where you went short last time. If the order flow cumulative delta, would you increase your order size, if that current cumulative delta bar doesn't reflect the price action? Meaning, right now we have a green cumulative delta bar. If this market were to turn up, you would expect that, right? You would expect buyers to come in if the market's rallying a little bit. But if that's red, would you put on another contract, right? Would you do a 2 lot instead of a 1 lot because that shows weakness?
Yeah, absolutely. 100%. I mean, everything that I do is based upon the response of the area that I have. The area I have is not what matters to me. So for example, if this 1 standard deviation from VWAP, that price is moving, right? And so as it's moving, that price is just a price to me, 31.75. Okay. I want to see what it does when it gets there. And this goes for any support or resistance level that I have. Once it gets there, the response is the only thing that matters to me. Because if they come in and they respond well at my level, that makes me want to be more aggressive quicker. That, now I'm not patient. Now I'm like sold because I want to get in right away. If I go up there and they're buying through my area, why do I want to be the guy who just sits there and gets run over? Doesn't make sense. This is why I like order flow tools, because they help me be in the now versus just a static price. And that's also why I like to use multiple contracts, because I can decide big, small, or not at all based upon what the reaction is.
Right. I love that. I love that big, small, not at all. By the way, Anissa has a question. We have an Ask DYE segment. You can ask Anthony questions via Twitter. You can just go onto Twitter, ask your question. Just make sure you have the hashtag AskDYE and @NinjaTrader in there, and we will pick it up. And this week, Anissa again provides a question, but it's great. I think it's relevant to what we're doing today. Her question is, given the components, should we trade the weakest or the most liquid out of the 4 equity index?
Well, they're all very liquid. I mean, you're always going to be able to get in and out of these futures markets. You're never going to be big enough, too big for them. Believe me, I've tried. It's not going to happen. You could try and buy as many as you want on the offer. If you think there's just a few there's way more behind it. So, to me, I go back to the principle of, I always want to be in a downtrend trading the shortest. I want to be trading the weakest market. I always, in an uptrend, want to be trading the strongest market. It goes back to, I remember I did an interview on Futures Radio Show years ago, and this guy made such a great point to me. He's like, how am I ever going to outperform the market if I'm not in you know, the strongest performers, right? And that's from a stock perspective, right? But when you think about that from a day trading futures perspective, don't you want to be in the one that has the most follow through? If the Nasdaq's the strongest market like it has been this year, what market has paid you the most intraday being long? The Nasdaq, right? And it would be the opposite for the Russell. It's been the weakest. And so therefore the downside moves have been the strongest. And so when you look at it on a day in, day out basis, when you're trading indexes, to me, if you have been around long enough to where you've gotten familiar with all the indexes, you always want to be trading the strongest one in an uptrend, the weakest one in a downtrend. And the S&P is typically going to be kind of that middle one. Not often are you going to see where the S&P is the strongest or the weakest. There's typically going to be those other markets that are the strongest or the weakest because the S&P kind of takes in from all of the markets. And so that's why I think the S&P is actually the best day trading market, because you can gauge the tape to see what's happening. And if they're all weak or all strong, that just gives you more confirmation in the E-mini S&P.
Right. Great answer there. Thanks for that, Anthony. I know we have a little bit of business before we wrap up.
Equity challenge, everybody. I am going to be in this epic equity futures challenge that CME Group is putting out there. The link, if you're watching this on my YouTube channel, you can go in the description and you'll see the link there. Also on our website, if you go to Where to Develop Your Edge Show, the link is there. Or of course, you can Google it and go to CME Group Epic Equity Futures Challenge. I'm going to be doing a daily video in there. Hope you guys can come in and participate. CME is giving away cash prizes, which is always great. Get some of that exchange money, right? First place is $2,500. Second place is $1,500. Third place is $850. You're competing against your peers. It's in a sim environment, risk-free environment. Go in, see how you do. And these equities are moving. I expect it to be fun and expect it to be really coming down to the last day. I don't think anybody's ever going to be ever out of it the way that we're moving right now. And so I think this actually kind of really ties into what we did today. Try this type of strategy, risk-free environment in this CME challenge. And, it allows you to see, with some skin in the game, because you could obviously win money if what I showed you today can help you in any way to choose an index.
I think it's great. It's upside only. The only thing you spend is your time, right? And it's good experience. It's good experience. Part of that 10,000 hours you need to be trading to be a good trader. This is part of it. And I can't wait. I'm going to be actually in Boston Sunday night, so I'm going to miss the first night. But I'll be back Monday evening and be right here in front of my NinjaTrader looking at this. So we can't wait. And Anthony, where can people reach you?
Just go to my Twitter at Anthony Crudele. It's X now. I'll never get used to it, but there in anthonycrudele.com and placeyourtrades.com. Check them all out.
Awesome. Again, thanks, Anthony. 30 minutes goes way too fast. Appreciate everything you said today, and can't wait till next week. So have a great day, and I want to wish everybody a great trading day as well.
You got it. See you, everybody.